So mortgage demand drops to 27-year low as interest rates pull back. I'm going to right off the top say pull back like barely. Okay, let's not get over our skis too far here. They're talking about from 7.31 to 7.21.
Drastic change there.
$3. Go run and tell everybody right now. No. But here's the deal. We got mortgage application falling last week. The Mortgage Bankers Association, even on their seasonally adjusted index, is saying we have less applications coming to the market. I mean, look, we know this. We're not going to escape this. There's industry-wide this is happening, so we're no different than anybody else is in that sense. But, what would you say about mortgage demand being into a 27-year low? Here we are again talking about in the way back machine. This is back in the 90s now. We're referencing those times.
Well, I mean, it's kind of like the conversation we had last week, right? I mean, that's 27 years ago. How relevant is that now?
That's older than you.
No, it is. That's why I think
right around my age.
How relevant is that now in 2023?
Yeah, and
is it?
And relevance is a great question, and it makes me cautious about these kinds of measurements because we're just seeing more and more of these. We keep seeing measurements that are compared to 2008 or 2000 .com bubble, pre 9/11, and then pre housing rise, and then we see this whole interest rates aren't that high compared to the 80s. It's like, yeah, but houses were $60,000.
So it doesn't matter.
I started. No, I feel like what they're doing is slowly conditioning us to let us know that this is going to be the new norm. Like 7, 8. Oh, wait, some days will drop, but 7, 8. And they keep pushing that and pushing that. Last week, we spoke about the same thing, 8% rates everywhere. And now they're saying 7, but it doesn't fall anywhere lower than that range. And then they do tell you but maybe in 2024, we might be seeing 5% by second quarter. But yeah, they also said that by 2023, at this time, we'd be in that range.
Mm-hmm. Right. And that's exactly what I wrote here. And I have a funny correlation for you guys because Mikey, you're super fit and you'll understand this. You're going to laugh at me when I tell you this, but I'm going to read this from the article first. Mortgage applications declined to the lowest level since December 1996, despite a drop in mortgage rates. Rates remain more than a full percentage higher than a year ago. Now, two things. First of all, 1996 was a long time ago, so that's not relevant to a lot of people in your age category. You two guys. And a lot of people that we talked to, the majority of our clients did not own houses in 1996. Yep. Some of them did, but a lot of them didn't. And also, again, in 1996, houses were nowhere near the price that they are now. Again, we're talking about a long time ago. And remember, at this time, everyone was projecting that we would see rates at 5.5 by this time and by the end of 2023, and that is not on the horizon.
No.
And I think it is disingenuous to say mortgage rates declined, and they're even though there's been a drop in mortgage rates. Now here's my correlation. If I weigh myself today and I go, Mikey, I'm 200 pounds. Mm-hmm. And then tomorrow I weigh myself and I go, Mikey, week over week, I had a drop in weight. I weigh 199 pounds. You'd be like, who cares? That's essentially the equivalent of what we're talking about here. Yeah. 7.3 to 7.2, come on. That's not, no one's coming off the fence.
It's not a noticeable difference.
No one's moving out of their houses because rates dropped that much. The house is not going on the market.
How many calls did you guys field last week? Because people were like, hey, there was a 1/10 of a change in the rate.
None at all.
I actually got so many, guys.
Yeah. Yeah, I don't think that's going to do it. I mean, it's kind of the nerve-wracking part because low inventory is low inventory. We have elevated mortgage rates, and these are just the accepted talking points at this point in the game. These are just the accepted talking points, and when are we going to call a spade a spade?
I feel like it took long enough for us to start seeing data like this that's just very brutally honest. That's just talking about what we've been saying for months now, and it goes to what I said. It's conditioning people to say, hey, this is the new norm. This is what you can expect, and we might give you a little bit of hope, but it's just so that we can continue giving you what's really going to happen.
And we did a show called "Is This the New Normal?" a couple weeks ago. Actually, it's not even a couple weeks ago. It's a couple months ago now. It was episode 29. Mm-hmm. So almost 9 or almost 10 episodes ago, we already did a show called "Is This the New Normal?" back then. That was in July. Yeah. So now here we are in the middle of September, and it's
it seems like it is. Yeah.
I think we are at the new normal. Hey, you guys remember when they started to use the word transitory? Where'd that go?
Where's transitory?
Where's that word?
I haven't heard that since 2 years ago.
Yeah. Interesting, huh? Yeah, and I see less and less of the word soft landing now because I think it's less and less of an outcome. Yeah.
Well, that's what I also feel, that they'll state one thing but then get away with it and bring out a new thing to focus on, and then we completely forget about what they said over here because now the new hope's here.
Yeah, and the inflation information that came out last week, you guys, was basically a confirmation that we have reinflation happening. Even if it is minimal, it's reinflating, not deflating, which again goes against the Fed's goal and their stated goal. So this is the new normal. I'm putting a stamp on it. New normal.
And I'm agreeing with it.
I agree.